into the exercise and finding it, right? Get into the exercise, find the trades, get the deals, practice it with arrows, only arrows, and then the bid offer, the depth of market, and then a live account on a small mini micro. Yes, your commissions are going to be high, but you should still be making enough to cover your commissions and a bit of profit on a mini micro. One contract, guys. One contract. Even if you want to trade the NASDAQ on a single contract basis and try and go for one tick profit, 2 ticks profit, $5 or $10, $5 or $10, and then start letting it roll if it's good value. $10, $15, $20, $30, $100, $200, $300, $500, $1,000 swings. Step by step. It's the only way you'll progress, guys. Tiny little steps. Try and make a big jump, and all that's going to happen is you'll go flat in your face, guys. Flat in your face. Well, I don't, Subra, because I want to trade against the value. If the value goes against me, then 2 ticks below, I have to get out. If the value's still with me and it's 2 ticks below, I'll generally add in a second contract. It just means I've bought too early. I've bought too early, but if you want to be disciplined about it, you can simply say, right, 2 ticks. If I'm wrong by 2 ticks, I want to know I'm wrong by 2 ticks. I need to be accurate to that 2 tick narrative. So it depends whether you want to do that as part of your learning process. In a real trading process, then I would, if I'm still bullish, I'll just add to my position down at lower prices, and I'll build a position around that trade. It's not adding into a loser because the value is still bullish. I'm adding into a winning trade just at a better price, right? Different outlook. So it's moved into a strong buy. Did you get any discounts? Oh, we got a few really good discounts, didn't we, guys? There was a big good discount there. There was a very good discount again in here. There was an outstanding discount there. I like that discount. A little bit questionable here because of the failed auction above here, but that's a good successful auction, so that's an enormous discount here. That's a very, very good discount again there. And I would say that that's a very good discount again there. So there would have been a lot of trades during that period. Let's see if they did any money. Okay, so this buy trade here, would you have taken it? It's the first trade of the turn, so yes, you would. It's the only time you would buy into a high is the first trade of the turn. Would you have taken this trade here? Yeah, probably. That would have been a winner, but you did get scratched on that one. Would you have taken this one? Sure. Would you have taken this one? Not a chance. Would you have taken this one? Absolutely. Would you have taken this one? 100%. Would you have taken this one? Sure. What happened? Well, this one ends up going up by 4 or 5 ticks. Scratches you out. And that's the trade. You know, that's you finished. Because obviously it then declines. You get a flip over in the lines here. And that's that sequence finished. You went from 66 to a high price of 82s. You made 16 points. And you made $320 during that leg. $320 maximum swing. You need to see the green. You need to see that the high price is in place. And you need to have a discount against the high price, Rich. Be more patient than more eager. If you have to take one lesson from this, is be more patient than too eager. Always err on the cautious side. Always err on the cautious side when you're learning this as a process. If you're not sure, just pass on the trade. Passing on a trade, not having to take a loss, is far, far better than missing out on a big rallying phase. Just pass on the trade. And you can see that this gave us a very nice leg lower, higher, lower. Currently in a leg higher just now. Would you have got any trades, guys, on that leg higher, yes or no? I don't know. Let's take a look and see. Well, we got a lower low here, relatively early into the turn, so that would have been a possible buy trade. And we got a lower low here, yes? So those would be your 2 buy trades, yes or no? Would you have bought this one? Probably, yep. You'd have bought this one and you'd have been in a little bit of trouble. But with the value line going up, would you have thrown away the position? I suppose that comes back to that question about size of stops. I would have probably have bought some more there. But when it fails to kind of auction and that turns back down again, I would have just scratched that trade a break even if I could. And I would have walked away from that trade there for a break even. Everybody agree with those trades? Now, why is that not a buy trade there? Well, because it's gone red. So you're probably looking at that buy trade and saying, no, not for me anymore. It went red at that stage. So because it's went red at that stage, and bearing in mind the speed of this, that higher high there might have been your first opportunity to jump in a sell. Now, I realize it's gone green at that stage, but it was literally 1 second difference. So you might not have been able to get that knowledge of it going green before you'd sold that. And it didn't make any difference. If you sold it, you made money. If you didn't sell it, you never lost any money. So it doesn't make any difference, right? It doesn't make any difference. The one thing I can guarantee is, if you practice this, and you practice it for an hour a day, on and off, say 15 minutes at a time for 4 occasions, within a week you'll be, your execution standard will be massively improved. Your ability to read value in the micro world environments that locals exist in will be massively improved. You may actually have made a massive breakthrough in terms of how you see order flow, how to execute, how to not make mistakes, the speed of execution, the accuracy of execution, the reading of value so quickly to allow you to make that decision is now going to be simply yours. And that's it. You can't lose that value, you can't lose that ability anymore now. Once you've got it, it can be transferred to gold, oil, the S&P, it can be transferred to the bonds, it can be transferred to the NASDAQ, it can be transferred to any market that it needs to be transferred to, because it's exactly the same process, isn't it? Do you agree with all those trades? Remember, it's not just about getting into the buy trade, it's about recognizing that value has gone against you and getting out of the buy trade. So obviously when I bought this one here, for example, the value went back in my favor, right? So I wasn't worried when it downticked. And even when it downticked here, I wasn't worried because the value was still making a higher low. So that is still another add-in buy trade, right? So when it rallies, I'm now in profit on those 2 positions. But as soon as that purple line makes a lower low here, then of course I'm on the wrong trade, guys. So I now need to get away from those, whether it's a simple break-even stop or a +1 stop or a small profit in the trade. Get me off the trade. If I wait more than 1 second, what happens? What happened if I waited more than 1 second on that knowledge, guys? I'm losing money on the first trade and I'm breaking even on the second. What happens if I waited 2 seconds? If I waited 2 seconds, my exit would be here. I would have lost money in the first trade, I've lost money in the second trade. So I had 2 seconds to avoid losing money. 2 seconds. You see how fast you've got to make that decision? Do you see how fast the markets really are at times? Well, if you can make that decision on the NASDAQ, guys, you can make that decision on any market on the planet. Because this is one of the fastest markets you can trade. That's why we're doing the NASDAQ. This is why we're doing the NASDAQ. Because it is such a fast market, guys. Classroom, by the way, will be starting in about 10-15 minutes. So if you've been doing that exercise and you're now totally shattered, which is probable, take a break, because I am telling the truth, you will be shattered if you do that exercise for 15 minutes without taking a break, guys.